the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian. I will take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares dipped today amid a mixed session in Asia. So if we look at the Straits Times Index, it was down 0.05% at 4,241 points at about 2:28 p.m. Singapore time. And that is with a value turnover of some 789 million Sing dollars seen in the broader market. Now, as we shared with you earlier, the STI ended in the green, up 0.04% at 4,245 points. In terms of value turnover, that's 1.38 billion Sing dollars. Gainers trailed losers, though, 211 versus 304. Top advances for today, we've got for you GMX USD, New Incorporation USD, and Venture Core. And top decliners, we have here Great Eastern, iFast, and HPL. In terms of counters to watch, we have Prudential, because Prudential's new business profit rose to 1.26 billion US dollars for its first half ended June, up from 1.12 billion US dollars seen in the year ago period. Now, elsewhere from how US President Donald Trump's 50% tariff on Indian goods came into effect, to look ahead to Nvidia's earnings due overnight, we've got more international and corporate headlines for you. And joining me on the line today is Jeremy Tan, CEO at Tiger Fund Management. Jeremy, welcome back to the show.
Hi, Tian Tian. Thank you for having me.
Great to have you. And Jeremy, let's start with global markets. Wall Street ended slightly higher in the previous session. Investors trying there to look past Trump's move to oust Fed Governor Lisa Cook. But how far have investors in Asia tracked those movements, because markets were sort of like a mixed bag?
Yeah, definitely. I think you have seen Asian markets today having mixed performance. I think there's really still a lot of uncertainty coming out from earnings season, and also the continued pressure by the President Trump against the U.S. Federal Reserve's independence, and also a number of geopolitics at play, as we have seen. A number of the tariff playbook that is actually coming back. There's a lot of uncertainties. I think especially we have seen in China and India. I think Trump is ratcheting up the uncertainty of tariffs against China again, vis-a-vis the magnets deal that is in place. I think there is a lot of cautiousness out of Hong Kong and China market, and as a result, there has been some downward pressure in Hong Kong and China. And you have seen also the Indian tariffs coming into play, some 50%, the highest within Asia economies. I think that is also dragging down Indian markets. While on the other hand, you have seen, for instance, like markets like Japan, South Korea, I think they have some positive returns out there, given that Nvidia is set to report earnings tonight. I think this would be probably a number that will the markets will be looking out for these tech-heavy markets.
And if we go back to the Singapore stock market as usual, Jeremy, how did the STI fare today? Any surprises if we look at the biggest movers?
Well, if you look at the overall STI market vis-a-vis overall Asian markets, I think STI has been quite flat today. Yeah. They have been consolidating ahead of some key results coming out of Wall Street tonight. Looking at some of the names that have done well today, they include Jardine Matheson, Venture, Keppel, some of the more cyclical names. Real estate names and REITs have been quite resilient as well. I think overall local yields in terms of bond yields have been quite suppressed or even moving lower. I think that is actually a positive backdrop for real estate names and also REITs. Also, we have seen a number of economic numbers that have come out in the first half and in July for the Singapore economy. They have been quite resilient in terms of the manufacturing output and also export numbers. However, I think there should be some form of caution, given that after August, for Singapore markets, there will be that tariff impact that will be coming into play, and that could potentially drag some of the export numbers going forward in the second half.
And zooming in on the counters to watch, Jeremy, we do have Prudential. Its new business profit rose to $1.26 billion for its first half ended June, up from $1.12 billion in a year ago period. I know you don't comment on individual firms, but generally speaking, what are the drivers of growth and the outlook for insurers with exposure to Asia?
Well, I think for insurers, I think for over the longer term in Asia, I think they will be benefiting from certain structural trends. Some of them, given that the aging population that we are facing in Asia, especially for Japan, South Korea, China, Thailand, I think these aging economies will continue to boost demands for insurance products, particularly for retirement, health-related insurance, and also because of the burgeoning wealth effect in Asia. As we know, the Asian middle class, overall wealth in Asia is actually growing. There's a lot more propensity to actually invest some of that disposable income. And as a result, some of that wealth management and saving products that are actually issued by these insurers would continue to be in demand by the burgeoning wealth effect in Asia.
And another counter we want to set our sights on is SingPost because, Jeremy, SingPost introduced this new corporate service for US-bound parcels after suspending standard postal services on Monday for commercial items that were sent there. Now, that's also ahead of Trump's so-called the end of de minimis exemption that avoided duties for packages under $100. Broadly speaking, how have postal and logistics players reacted to the end of the tariff exemption period? Any lasting impact on of Trump's move on small parcels?
Well, I think definitely there is going to be a very significant impact for postal companies. Already, we are seeing some quite weak numbers out of our local Singapore Post. I think they have already started to implement some measures, in particular for corporate services, to actually mitigate some of that disruption and also to ensure compliance of the exports into the US that are actually falling into this de minimis basket, which is the small value items. I think looking at the overall tariffs for all these small value parcels, they are actually quite high. If you look at the overall tariff rates for countries below 16%, they can go for as much as from $80 for a small parcel to almost $200 for some countries with tariff rates above 25%. So as you can see, that there will be a lot of consumer behavior change. A lot of consumers will probably, within the US, will probably not actually import some of these smaller low-value items using a cross-border e-commerce channel. And as a result, I think that will actually put certain pressures for some of these postal companies. Already we are seeing some international postal companies actually suspending their shipments to the US. So I think over the long run, I think is whether some of this postal company can actually diversify away from their core business model and actually, pass on some of this cost to the end consumer. So I think there's still a lot of uncertainty and also a lot of challenges for postal companies going ahead.
And Jeremy, if we talk more about tariffs, earlier you mentioned about India, we have to talk about that as well, because Trump's crushing 50% tariff on some Indian goods, which is the highest in Asia, that came into effect today. And that is to sort of punish the country for buying Russian oil. It also upends a decades-long push by Washington to forge closer ties with New Delhi. How much of the impact of the new tariffs have been priced in so far, and what should we watch from this point on?
Well, I think definitely looking at the 50% U.S. tariffs on Indian goods, I think this is really extremely high vis-a-vis other Asian trading partners against the U.S. If you look at the overall markets that the overall market that will be impacted within India, I think there will be probably some of the sectors like steel, chemicals, textile, automobiles, the really very export-heavy sectors would be definitely affected. I think going forward would be probably looking at whether there will be counter tariffs by India, or whether there will be further diplomatic developments. I think we have already seen Modi making a trip down to some of the key trading partners, such as China and Japan. So I think there is still a lot of long-term trade implications. At this point in time, definitely there will be a short-term impact on some of these exporters. But I think over the long run, again, is really how India can transit and mitigate some of this impact by shifting that demand back to the domestic industries or domestic consumption, so that they can actually tie through the lower export volumes into the U.S.
And finally, before I let you go, Jeremy, Nvidia is due to report earnings overnight. And I believe U.S. options market data that is showing traders pricing in about $260 billion US swing in Nvidia's share price post-earnings. So what are you keeping your eyes on, and how far are your projections in line with the market expectations thus far?
Well, if you look at the overall Nvidia's upcoming earnings, that is actually highly anticipated. The option markets are already signaling some mild volatility into the earnings. If you look at the overall earnings estimates by the street right now, Nvidia is set to report a 53% year-on-year growth. That is actually ahead of Nvidia's guidance slightly. And that is largely going to be driven by the data center revenue growth. But beyond the numbers, I think really we would like to look at the guidance that Nvidia put out during the earnings release on whether this AI growth can continue to go from strength to strength, and whether that migration from the current chips to the next generation Blackwell chips will continue. And furthermore, I think also looking at the margins has been a little bit below Street's expectation, whether that margins can pick up on a gross basis back to 75%. And I think investors will probably be looking also at the China-centric exposure. I think given that over the last month, the easing of that U.S. export restrictions into China, and whether that will actually cause some form of upside volume growth for Nvidia in the quarters ahead.
And just a curious question, do you think Nvidia will factor in China's sales, as you mentioned, into its guidance, or do you think it will take a page out of AMD's playbook?
Oh, well, I think they will probably, look at it holistically in terms of their guidance, rather than give specific guidance out of China, given that that is still a lot of uncertainty in play. They are actually, there is still a lot of political uncertainty, given that the Chinese government is also, probably discouraging the imports into China.
Thanks so much for the insights today, Jeremy. That was Jeremy Tan, CEO at Tiger Fund Management. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.